Here's a tweet. This is from @EUSREP. United Technologies is the question, UTX. What are your views on this for the medium to long term?
So we don't own UTX, but United Technologies fits into the aerospace theme, and they're a big supplier into that value chain. And the stock's performing very well. The most recent earnings came in about 8% ahead of estimate. Stock's very close to new highs, so I can be very comfortable owning that. We don't own it currently.
What's your favorite U.S. industrial?
Favorite U.S. and probably Boeing, and behind that, DuPont.
DuPont. Okay, Wayne's in Halifax as we get back to banks here. Go ahead, Wayne.
I'd like to have your guest's opinion on what will eventually happen with the Canadian banks when the interest rates start to go back up. Thank you.
Right. So the banks today are pretty good at managing and matching off their liabilities. So I don't think that ultimately it's going to pose a major problem. Generally, as rates go higher, it's helpful to the banks because they're able to widen out their spreads a little bit. Ultimately, what it probably means if interest rates are going higher is that the economy is improving. And if the economy is improving, there's probably more loan growth. And so ultimately, I think you would expect the banks to do reasonably well. I just think at this point, there's no real indication that we are going to get a big boom in the economy. I think things are steadily sort of improving in the U.S., probably slower than the Fed would like to see. And in Canada, things are probably a little slower than they are in the U.S. So I don't think that's a big driver right now.
Let's talk to Elsa, who's in Oliver, BC. Hi, Elsa.
Hello, good afternoon. I like Mr. Burrows' opinion about buying Alerian MLP ETF.
Okay, so for those that don't know, in the U.S., a lot of the midstream energy infrastructure companies, pipelines, transportation, some of the processing companies, are structured and held inside of a master limited partnership whose sole purpose is to pay out a large part of the cash flow to the investors. So a lot like our income trusts were.
Right.
And so the problem is that with a master limited partnership, an investor has to wind up paying tax locally in the states that the MLP is resident. So that's not a great solution for a Canadian investor. Alerian MLP is an ETF that basically packaged up a number of these MLPs and provides the cash flow to investors while taking care of the tax problem and making that a non-issue. So as a Canadian, it's a way that you can invest in US MLPs. Now, the yield winds up being a little bit lower because they're basically dealing with the tax up front, but you don't want that tax problem. So we like it, we own it. It's in a fund that we run, which is a basket of ETFs, and I think it's a very good play on energy infrastructure in the U.S. You know, it's not just the oil sands growing, you've got oil booming all over North America, and constraint on ability to move oil around means that these folks are making lots of money.
And some interesting players in here. Plains All American, which I think is a Berkshire company, isn't it?
Yes, it is.
And Kinder Morgan and many others, so access to all kinds of different sorts of companies. Here's Robert now, who's in Kitchener. Go ahead.
Yes, David. I would like your opinion on Eli Lilly. I've held it for a while, and I've made some good money. I'm wondering, would you buy more at this point in time, or would you just hold on to it? Thank you.
Look, dividend payout is about 50%. Dividend payouts, I think, in general are working their way higher. Everybody knows that there's drugs coming off patent. That's kind of built in. I think that you're buying this for yield and for dividend growth as you go along and relatively low volatility. It's in the right group. I have absolutely no problem owning it. We don't own it currently. I think there's a couple of better names in the group, but it's performing very well and is right in the sweet spot of one of the key themes in the market.
And one of your top picks is in this sector, so stay tuned for that choice and find out what that is. Nick's in St. John, New Brunswick. Hi, Nick.
Hi, good evening, gentlemen.
Good evening.
I want to get your opinion on Inter Pipeline. I know it pays pretty good dividends. I wonder if you see any growth there with 12, 24 months. Thank you. I hung up and listened to you.
Thanks, Nick.
Right. So Inter Pipeline, I think, is one of the best ways to participate in the growth of the oil sands. One of their core competencies is that they take distillates, liquids that come from natural gas, ship them up a pipeline from Fort Saskatchewan to Fort McMurray. The oil sands producers take that, mix it with bitumen to move bitumen back down the pipeline. As volumes grow in the oil sands, Interpipe is a big beneficiary of that volume growth. It's pretty much as simple as that. You get an almost 5% yield. You're going to get dividend growth probably 5 to 10% a year over the next 5 years. And I think that makes it very attractive. To make it clear, we are not big investors in oil and gas producers right now because they are constrained in their ability to get their product to market. But the pipeline companies and midstream energy infrastructure companies kind of have a stranglehold on moving the stuff around, and they're figuring out they've got pricing power, and every one of them that's reported this week has beaten estimates by a significant margin, and I think that's going to go on for quite a while.
Did you have a chance to look at Interpipe's numbers? They came out today, as you probably know.
Yeah, the numbers are very good. Mm-hmm. This is one of our very biggest holdings, along with Keyera and AltaGas. It's a core position.
So more than 5% for Interpipe?
Well, a big position for us in one of our income portfolios, about a 4% weight.
Right.
These are big weightings.
Okay, David, lots of demand for you tonight. We couldn't get to all of them, although we will now in a different way through the Market Call Minute. We had Facel call in from Edmonton on Imperial Oil.
Again, the big integrated oil companies I would avoid here in Canada. No pricing power at this point. I'd prefer to own the infrastructure companies.
Albert in Ottawa on Athabasca Oil. Same answer?
I'm going to give you the same answer.
All right, so no to that one. Larry in Minden, Ontario on National Bank, NA.
I think National Bank is the one I would avoid the most of the Canadian banks. We prefer Bank of Montreal.
Too regional?
Yeah, too regional, and I like Bank of Montreal because they do have, for the first time, they're getting big benefit from their exposure in the Midwest after it being more of a liability for some time.
Ed's in Toronto. He wants to know about Barrick multi-year low on this one.
I'm shocked it took this long to get a call on the golds. We would still avoid the golds. I think that if the dollar is going to get a little stronger, the golds are probably going to have a tough time.
Hassan in Woodbridge, Ontario, called in about Oracle.
Oracle in the software space, software has been underperforming. I would prefer some of the other technology names that may be more dividend related or with a higher growth. They're getting lots of challenge from SAP in their own backyard.
Darren's in Winnipeg, Home Capital Group, the lender.
Well, everybody should know that, this is a company that is very focused on the Canadian housing market. There are some reasonably high-profile U.S. short sellers who have been shorting this stock. I can't comment on whether I think they're right or not, but you are facing a headwind in this stock.
And you don't hold it?
We don't own it currently.
James in Edmonton, New York Stock Exchange, Euronext. Do you like this kind of investment?
Look, as equity markets have been doing a little better, we talked about asset managers earlier, and I think that the exchanges are also beneficiary of stronger markets.
Linamar came out with earnings in the last 24 hours. Omar in Guelph, Ontario wants to know your opinion here.
So we're big shareholders in Magna, and I can tell you we're taking a very hard look at Linamar right now as a second candidate.
Why would you want to own two auto parts company?
We've always found when you find a sector that starts to perform well, you start with what you perceive to be the leader. And as it continues on, you look to add in the group to other names, and Linamar is a very strong company. And
did you go over the earnings numbers?
I haven't taken a close look at the earnings numbers yet. I've got an analyst doing due diligence right now.
Okay, stock up 4% as we saw there. Their adjusted EPS beat estimates. Revenue missed a bit. I believe we had the CEO on today on BNN. Check that out on bnn.ca if you didn't see it. Stay tuned right now, though. We have David with his top picks after this.